A glut today, a shortage tomorrow. Is the oil market fighting the wrong battle? The head of Saudi Aramco is sounding the alarm. A global oil shortage could be looming. After a decade of underinvestment, the world's largest oil company said that the industry has turned its back on the search for new oil. But for now, the market is grappling with the opposite problem. Oil prices are expected to drop as OPEC Plus ramps up supply. So should we be bracing for a price slump or a supply shock? Amena Bakr is head of Middle East at Kpler. So Amena, is a looming supply crunch a real concern?
I think that this is a viable argument because we are seeing a crunch in spare capacity. At the moment, within the OPEC Plus group, we can see spare capacity at around 4.4 million barrels per day. So if we do get a supply shock somewhere, we won't have enough of a cushion to cover that. And given all the geopolitical risks that are going on and the volatility, I think that is a very viable alarm to raise that we do need more investments. And as you know, we need very long lead investments into the upstream sector to actually bring on capacity.
Let's turn to OPEC Plus top producers now, and Saudi Arabia wants more oil, Russia wants to go slow. How will this standoff play out? More pumping or more caution?
I disagree with your argument there that Saudi Arabia wants to speed up and Russia wants to slow down. In fact, during the last meeting, Saudi's energy minister, Prince Abdulaziz, during the meeting asked the Russian representative Novak if there was any discussion around a 500,000 increment into the market. And he said, no, the proposal was always 137. So there is no disagreement between the parties, and I see them very aligned. The meetings are very short, so I don't sense that tension. Is there a general concern that prices are low? Yes, there is a concern. And this volatility is creating a lot of concerns around that. But in terms of finding middle ground with OPEC policy, I don't see them colliding yet, at least.
Meanwhile, the IEA now says that the coming oversupply will be even larger than expected, but markets were largely unimpressed. Why aren't traders pricing in this bearish forecast?
I think traders are too afraid of expressing their bearishness into this market. They realize that there are a lot of geopolitical risks here. Even, I mean, if we're talking about the tensions in the Middle East, I don't think that any resolution has been met yet between the U.S. and Iran. That remains a major risk. The war is still ongoing between Russia and Ukraine, and who knows? I mean, what kind of geopolitical risks would cause disruptions to supply? So I think traders are bearing all of that in mind and not expressing this bearishness into the market. And that's why we're seeing prices where they are today.
Let's talk more geopolitical risks. And Bank of America is now warning that Brent could fall below $50 a barrel in the coming months due to the tensions between China and the US. Is this a real risk, and what's your price forecast?
I don't think that's a risk that we are currently assessing at Kepler. I mean, our price forecasts for 2026, the beginning of 2026, is Brent staying within this $63 to $64 zone. I think that the floor really for Brent prices in 2026 is perhaps $60. So going below 50 is a very extreme scenario, and I think it's highly unlikely, even with all the trade tensions right now that we're seeing. I mean, tweets are moving the price every day, so that's the kind of volatility that this market is facing.
Finally, Amena, oil prices ticked higher this morning after President Trump said that India would halt Russian crude imports. Are the sanctions finally starting to bite, or is this just noise?
My point in case, see, one tweet moved the price up. So you get one tweet from President Trump about India, and then you get another tweet about, trade tensions. So all of that is, prices are very vulnerable to all of these mixed messages, I would say. And yes, I mean, India for now is not ready to abandon Russian crude. That's very clear. They have a huge population. They basically need to keep the lights on. I do expect all these factors to kind of, from time to time move Brent up, move down, and this is the kind of mixed signaling that the traders need to navigate. But on a fundamental side, I just want to clarify that we are not seeing stock builds up. We're not seeing stock build up in OECD countries. There are no global stock builds yet. So that's also something very supportive to the price.
That was Amena Bakr from Kpler. Don't forget, you can watch more videos on Reuters.com.